Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage-eitel.
All right, my name is Mark-eitel, and you are listening to the Mr. Mortgage Show, and you are in the right place if you want the information and the data that you need to make better real estate and mortgage decisions for you and your family. Dom and I do this each week right here, same time, same station, and we dive deep. We dig past the headlines. We answer all of your questions and concerns. We're going to get your questions on the air. But before we do that, I just want to let you know you're in the right place if you want the information and the data that you need to make better real estate and mortgage decisions for you and your family. That's what our goal is, and that's what we do each week. So to get your questions on the air live right now, just call or text them in to 561-291-8569. That's the Anytime hotline, 561-291-8569. And if for some reason you're unable to catch us while we're live on the air, you can also use that number. It'll push to my office, and someone will get you the answer that you're looking for. And that's 561-291-8569. And each week I like to get started by reading some of the headlines and then reading the data that's also included in the headlines, because often the data doesn't necessarily support the big screeching, blinking, attention-getting headline. Usually those are just the clickbait, if you will. But as you dig a little bit deeper, the data often suggests something completely counter to the headline, and that's what makes me crazy. We live in a time where I don't know what they're called. What is it, Dom? The reels, the little short videos. Is that what it is?
Yep.
Yeah. So when you're scrolling through Facebook, that little short, instant gratification, attention-getting reel will grab you. And next thing you know, you spent 15 minutes scrolling through these reels and you have no idea what any of it was about, and you were slightly entertained, but you're never going to get those 15 minutes back. And that's what the headlines do to us. If you read the headlines all just stacked up on a page, whether it's, whatever the news.com is that you follow, or if you're old-fashioned like me and still enjoy a newspaper, it's like the reel on Facebook. It's that little attention-getting, 15 seconds, and it's up to you to figure out what it really means. So that's why we're here, and that's what we do. I had a lot of interesting questions this week, and we'll incorporate some of them into the show. Primarily around, is it still a good time to buy? People are hearing rates are going up, and prices may be coming down. And that reminds me of that old 70s song. What was it? The stock market's interest rates are up, stock market's down. I don't remember the name of that song. Somebody text me in that name of that song if you remember it. But that's where we are. Rates are going up. The stock market's been getting beaten up pretty good over the summer so far. And there's just a lot of economic uncertainty. And a lot of people are curious if real estate makes sense still. Sellers are wondering if they missed the boat, if they waited too long to list and they're not going to get that all-time hero high of the neighborhood price. So we're gonna dive into all that, and we're going to get to your questions. So did I throw the Anytime hotline out there already? I think I did. 561-291-8569 is the Anytime hotline, and Dom will get your questions on the air. But one headline that jumped out at me when I was looking through some show prep was May prices. And they're talking about home price growth saw its single month largest slowdown since 2006. And that 2006 date scares a lot of people because that reminds us of the housing crash. And prices have come back down, but my God, they've needed to, because we can't continue this, double-digit appreciation cycle that we've been in. And while the prices seem to be cooling a little bit, it's cooling in relation to a year-over-year appreciation. It's not worth less today than it was yesterday. A lot of these numbers compare year over year. So you need to be very careful when you're dissecting the data. And this article referenced that very same thing. It was a year over year slowdown in May. But the interesting thing, as we read through the article, the inventory remains 60% below historic averages. So if you factor that into the equation, there's still not enough housing units available for the amount of people who want to buy it. So as we talk about every week, and if you follow the Facebook page or you follow the podcast page, you hear me talk about it all the time. That's truly what governs pricing, is supply and demand. Heck, I heard Dave Ramsey say it, and he's the most conservative voice in, financial radio shows. And he says, supply and demand indicate that housing is going to, remain stable and probably appreciate. And if you don't believe me, go to his podcast or his website and search it. He said it himself. And this article says the same thing. The growth has slowed a little bit, but that doesn't mean it's going down. It's just growing at a slightly slower pace, and very slightly, by the way. And it's all because inventory still remains at a 60% number below historic averages. So super interesting there. Home listings surge on rising rates as rising rates, push buyers to the sideline. So that would indicate that there are fewer people available to buy. So all of this inventory is stacking up. And again, if you read the article, it says still housing inventory remains well below pre-pandemic levels. Active listings remain down 34.1% compared to June of 2020 and 53.2% compared to June of 2019. So housing listings surge as buyers are pushed to the sideline by higher interest rates. And then in the very same article, references that active listings are still well below the pandemic levels of June of 2020 and 2019. So I'm sharing all that just to encourage you that there's no end of the world scenario at the moment in housing. Housing inventory remains tight, demand remains high. And one of the super encouraging things we've seen in the last probably 4 or 5 trading days, and this was a short week in the bond market. So going back to the Friday before the long weekend, we've seen some pulling back in interest rates. You know, when the Federal Reserve announced that 75 basis point hike earlier in the summer, last month in June, we saw what happened to interest rates. They ran up to around that 6% mark. Well, they're starting to pull back. We're seeing rates in the low to mid 5s again. And I think that's encouraging people to kind of poke their head out of the sand and take a look around. And this increase in housing inventory is giving them more choice and more negotiating power. So all of this, in my opinion, is still super good news. It's certainly good news if you're a buyer, but the fact that there's still so much demand encourages me as well as a seller. So that's where I'm going to leave it on the headlines. I don't want to beat the headlines over the head too much. It's too easy to poke fun at the headlines because we've just gotten into this short attention span clickbait world where the headline screams at you, but when you read the data, it kind of whispers sweet nothings in your ear. And that's where I found us this week in real estate and mortgage. So we're going to get to your questions, as I promised, as we move forward into the show. I'm going to throw the hotline out there one more time. 561-291-8569 is the way that you get your questions answered right now. And while we have a second, I want to give a quick thank you to our featured sponsor, Willow Title Services. We're super happy to have them on board. You're going to hear me advertising for them throughout the show. You'll hear their spots running in all the breaks. They're a great organization. The organization was started by Heather's mother, and Heather runs the team now, but they've been serving the real estate community locally here for many, many years, probably as long, if not longer, than I have. And we're going to get them in the studio and learn more about them. But they're super, super cool people. They do a lot for the community. And I'm not going to talk about too much of that because I want Heather to share a little bit about what makes them tick and why they do what they do. But just a big thank you to Willow Title Services. If you're an agent or you're selling by yourself or you're an investor looking to do some flips and you've got some complicated title work that needs to be done, these people are rock stars. Give them a shout. 561-737-1630 is Willow Title Services number in Boynton. They're awesome people to work with, but a big shout out to them. So you hear the music rolling up behind me. That means we're going to prep for a really short break. On the other side of this break, we're going to get into your questions, and I'm going to tell a story about why a title agent is super important and how the right company can make or break a deal, because I had an experience with a title company this week that wasn't Willow that almost cost the buyer thousands and thousands of dollars, and it was not a friendly situation. We worked it out in the end. They did the right thing, but a simple mistake can cost thousands of dollars, and that's why you want a great team on your side. So we're going to dig into that. We're going to get to all your questions and continue to cover the real estate news of the week. We'll be right back in 2 very short minutes.
Buying a home can be stressful. Willow Title Services will help you close the deal, offering tailored services for your unique home buying needs. You'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit 8198 South Jog Road in Boynton Beach or call 561-737-1630. That's 561-737-1630. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you heard the announcer. If you want your questions on the line or on the air, just call that hotline, 561-291-8569. That's 561-291-8569. That is the Anytime hotline, and Dom is manning that line. He'll get your questions on the air to me. So, hey, I know I always sound super optimistic about real estate, and for the most part I am. It's not the right thing for everybody at all times, but I do think, I just don't want people to lose sight of the opportunity in the market, because historically, whether you purchased in the 80s or the 70s, over time, and I'm not talking about 40 years, I'm talking about getting through the recession, and we're all, I think, finally admitting that, if we're not in the recession now, it's likely. I'm hearing people finally admit it, although I think we're deep into it. But real estate has always made sense. It's a safe hedge against inflation because you control your monthly payment with a fixed interest rate mortgage product. And the one thing I really, really love about real estate, I want to share before we dive into your questions, and this was around a conversation I had this morning with a group of real estate agents who are investing on their own, which is super encouraging because they're seeing the opportunity in the market that they're serving as agents, and they're saying, hey, I want to buy. I want to use some of these investor loans. I want to buy some rental property. I see the long-term value in what real estate can do. And I think the biggest strength of buying, investing, or owning real estate is around leverage. Because if you have $100,000 to invest in the stock market, you're putting that entire $100,000 in the market, and it's all out there. You've invested the $100,000, and you'll get $100,000 worth of appreciation or depreciation of that asset, unless you're margining your portfolio, and that's a much more sophisticated investor strategy that I won't discount. I'll touch on that in 1 second. But for the most part, you're in dollar for dollar. But if you had $100,000 in real estate, and assuming you had the income to support it, or if you're using a debt service coverage ratio loan, an investor loan, you could buy $1 million worth of property with some of these loans. So $100,000 buys you $1 million worth of appreciation, or I get it, there's risk also, depreciation, but you're leveraging that investment and you're getting the appreciation on $1 million instead of $100,000. And if you're buying investment property, guess what? Somebody else is servicing the debt on that leverage. And if you margin your portfolio, the only other person or other entity or other being to service that debt is the proceeds generated from the investment within your portfolio. You're servicing that debt, my friend. So real estate just affords us a very, very unique opportunity to build wealth through leverage and stability. And the reality is, don't get me wrong, I love the stock market. My brother is a very successful investor. He started as a broker here locally. He's since relocated and he only manages his own portfolio. But you can't live in your portfolio. You can't live inside a Bitcoin. You can't live inside your Robinhood account. But you're going home and you're paying rent, which means you're paying someone else's mortgage, or you're going home to a house that you own. You can live in that investment. So I just wanted to throw that out as just justification and encouragement to keep your head up, keep looking for the opportunity that's out there, because it is, even in this market. And if you have questions, give us a call. That number is 561-291-856. What is it? 291-8569. Every time I freeze up, Dom laughs at me. 561-291-8569. And that pushes to my office during the week. So speaking of your questions, I am going to throw it over to Dom and see what we have teed up.
Sandy sent us a text. We want to buy a couple of rental properties, and a friend mentioned a special landlord loan. Is this a good idea? Can you explain what this is?
Hey, Sandy. Yeah, so I just actually kind of touched on that. The DSCR loan that we reference often is also called a landlord loan. And what DSCR stands for is debt service coverage ratio. Basically, that means if the property's cash flow will support the debt, right? The mortgage payment, the interest, the principal, the taxes, the insurance, the expense of owning that property, not necessarily the maintenance, but the mortgage portion of the expense, as long as the property will support that, the income, the rental income, then you don't have to have your personal income underwritten to meet the debt to income ratios. So if you have enough assets to put down on the property and you meet the reserve requirements, then as long as the property cash flows, it's quite a simple process. It's called a DSCR loan. It's designed for income producing investment properties. And oftentimes that's called a landlord loan. And, depending on your credit score and the program and the property type, you may plan on putting somewhere between 15 and up to 25% down on the property. But after that, the property, as long as it cash flows, that's a fundable deal. And the cool thing about a strategy using a DSCR loan is once the property is cash flowing, let's say you increase the rents, as soon as you increase the rents, you've now increased the value of the property. There's nothing to say that at a later date you couldn't refinance that loan with another DSCR loan should you wish, pull enough capital out to then go buy another investment property. But I believe your friend is referring to a DSCR loan, which is called debt service coverage ratio, because often that's called a landlord loan. And I actually prefer landlord loan. I think that's it's hard for me to spit that out. It's a tongue twister, but I think it's a pretty cool name for that loan because it's designed for landlords and works really, really well for that. So I'd love to talk to you more about that if you have additional questions or need additional info. But you can hit our website, go to www.mr.mortgage, never.com, just type in mr.mortgage and learn more about DSCR loans there. Or feel free to give us a shout during the week. I'll be happy to answer any questions you have. But hopefully that helps, and thank you for sending that one in. Hey, Dom, what else do we have?
Oliver emailed this. How do we make an appointment with you to talk about a reverse mortgage? We've read a lot on Google and are still confused.
Hey, Oliver, thank you so much for that. I would welcome the opportunity to talk with you. They're super confusing. To answer your question, the easiest way is to just call that number, 561-291-8569, and we'll schedule an appointment. And you can come to my office. I can come to you. We can jump on the phone. We'll do it any way that makes sense for you and get you the answers that you need. But hey, they're confusing. Sadly, I guess it's good and bad. I hesitate to say this because I don't want to sound like I'm souring on the idea, but there are let me rephrase this. Opportunistic people chase opportunity. And right now in the mortgage business, there are a lot of companies that lived and died by the refinance boom of the last couple years. And they're all looking for a new shiny story to tell, if you will. And reverse mortgages are sadly that story that they're telling. So there's more confusion around them than ever before because there are more sources of data. And I'm not saying that's a bad thing on the surface, because I think the more that people are educated, the more sources of education, I welcome that, because I think it's super important that you take all of the time in the world that you need to get comfortable with this, because it's a big decision and it's not right for everybody. I mean, I heard this said a long time ago, the same hammer that built the house can be used to tear it down. And the hammer is just a tool, but in one person's hands, it can build a house. And in the wrong person's hands, it can tear that house down. And that's how I feel about reverse mortgages. For the right people, they're an amazing tool that can significantly change your life and make you much more comfortable. But used incorrectly, they can make a mess of things, just like that hammer reference. So, hey, I appreciate you reaching out to me. I value the trust that you must have in us to give us a shot to answer your questions. But call that line. We'll set something up. As a matter of fact, I know Dom said you emailed your question in. I'll just email you back my contact information, and we'll get squared up and get you in for an appointment and get your questions answered. And I don't say any of that hammer reference or the newfound resources in the market to discourage you from looking, because as I mentioned, it's a super valuable tool for the right person, and used correctly, I've seen it make a significant difference in people's lives. So again, I appreciate that question. Thank you so much for sending it in, and I look forward to talking with you offline and getting you all the answers that you need. So anyway, you hear the music rolling up behind me. That means we're going to run into a very short break. We're going to be back in 2 minutes to take more of your questions, and shoot us those questions at 561-291-8569. Thanks.
Buying your home is likely the biggest transaction you'll ever make. With stakes that high, you need certainty. Willow Title Services strives to take the stress away by providing a single point of contact with clear communication, resulting in a painless and positive experience. Willow Title Services has over 50 years in industry-leading and closing techniques, rooting them in the experience needed to get you to the close. Call Willow Title Services at 561-737-1630. That's 561-737-1630.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right. We are back. My name is Mark-eitel. You are listening to the Mr. Mortgage Show, and we are answering your questions. And we're going to do a rapid round because I see we have some stacked up. It's my favorite part of the show. I got my thinking cap strapped on. I've scratched my lucky bald spot 3 times, so we are ready to roll. Let me throw it over to Dom and see what we have teed up.
Connie sent this text in. How hard is it for a Canadian citizen to get a mortgage in the U.S.?
Hey, Connie from Canada. It's not hard. So there are Now, I have a couple questions for you, so this may spill to an off-the-air conversation, but it's not difficult at all. There are 4 national programs that require, no visa status at all, and with as little as 20 to 25% down, you're able to purchase a property as an investment or second home. We do those quite often. We're in the middle of a transaction right now with a gentleman from Ontario who's doing that very same thing. His long-term goal is to immigrate to the States, but he's going to grab a property now, and he has the means and the credit to do it. So we're going to use a foreign national program and get him set up, and then he's going to go ahead and go through the visa process. Once he has his green card, it's a whole different animal. If you do have permanent resident alien status, aka green card, it's a much simpler process, and the full gamut of loan programs are available to you, but not a difficult and not a uncommon scenario. We do it all the time, and we see it all the time, and we welcome you from the Great White North. So hopefully that helps. If you need more info, give me a shout, and I'll be happy to dive deeper with you. Hey, Dom, what else do we have?
Here's a question from Ray. Can I get an equity line on a rental property? I want to pull some cash out to buy another unit.
Hey, Ray, that is an awesome idea. And the answer is typically no. Usually the equity line is designed for a primary residence only. But as I mentioned a couple questions ago, we were talking about the DSCR loan. And you can refinance a rental property and pull cash out with the purpose of that cash to be, actually you can pull it out for whatever reason, but certainly a lot of people use what's called the BRRRR strategy. They'll buy a property, they'll rehab it if necessary, they'll rent it out, and then they'll refinance it, pull cash out, and then the last R in BRRRR is repeat. So they'll use that BRRRR strategy to buy, refinance, and repeat until they build the portfolio they want. So typically with a rental property, you're going to be looking at a cash out, refinance, and I'm happy to walk you through that if you need more info. So appreciate the question. What else do we have, Don?
Terry sent the text. What is the lowest credit score I can have and still get a mortgage? I make good money and have a decent down payment.
Hey, Terry, that's a great question that doesn't have an exact answer. There's not a specific answer around that. So, with VA loans, you can go down into the low 500s. With FHA loans, you can go into the mid to slightly higher than mid 500s credit score. What's more important than the score is the type of derogatory items that are posting on there. Are they tax liens and foreclosures? That's going to be a much more difficult process, and in some instances unlikely until some of that derogatory credit gets squared away. The good news is we can do a credit score simulator for you and let you know, by paying this down or paying that off, your score could change as much as X points. It's a computer program that does payoff simulations and balance adjustment simulations, but there's not a specific answer to that question. It's going to require a lot more information, and I'm happy to walk you through it and have that conversation if you're interested. But while we're talking about this, I heard, and I think this is going to be helpful for some people, that's why I want to run down this rabbit trail real quick. I heard a real estate transaction likened to a table with 4 legs. And a table with 4 legs will stand. And one of those legs is the property. The property, passes inspection and appraises that, and then you've got one strong, stable leg. The other 3 legs of that transaction are on the borrower. And those 3 legs are your credit, your income, and your assets. So let's take that analogy and turn it into a stool. A 3-legged stool will stand. Now, if you sit on it at the wrong angle, you're going to go down. But a 3-legged stool will definitely stand. So if you had great credit and great income, but you didn't have a lot of assets, well, that's a fundable transaction because there are programs out there with high loan to values if you meet those other 2 requirements. If you have great income and not a lot of assets and great credit, I might have just done that one. But my point in all this is that with income and assets, sometimes you can make up for credit. With credit and income, sometimes you can make up for assets. It reminds me of one of those adult tricycles. I just had this vision in my head, and bear with me because everybody who listens to the show knows that I think in pictures. So we live in a neighborhood, Mrs. Mortgage and I, where there are a lot of seniors, and I really, really love my neighbors. But they're like a gang of bikers riding down the street with these adult tricycles. So I, for the longest time, wanted one. I thought it was the coolest thing. And yes, I wanted a flag on mine and a bell and a daisy. Don't ask me why. I wanted a daisy on the basket because I didn't want anybody to think it was mine. I wanted them to think I was riding hers. So I finally got one. I had a blast. I'd ride it to Publix. I'd ride it to the clubhouse, to the swimming pool, to the shuffleboard courts. I was all over the neighborhood with that. But what I quickly learned was if you tilt on an angle, you can ride that on 2 wheels. You don't need all 3 wheels to ride. Now, it's not easy, and I busted my butt a bunch of times, but it made me think of Ray and the 3-legged stool. I was riding a 3-wheeled bicycle on 2 wheels. So as long as you have 2 of those wheels on the ground, you stand a good chance of getting funded. So, Ray, I know that was a crazy, crazy answer to your question regarding credit score, but I think you see by my answer there's a lot more to it than just a simple score number. So let's have that conversation off the air. Give me a shout during the week, 561-291-8569. And if you guys see a bunch of senior citizens that look like Hell's Angels rolling down the street on their 3-wheeled scooters, just give them a wave, get out of the way. They're on their way to the early bird, and they don't want to be messed with because I was in that pack too. So anyway, let me throw it over to Dom for another question.
This one is from Linda. Are there any loans offering 100% financing for first-time buyers?
Hey, Linda, that's a great question. So there are a couple of ways that a first-time home buyer can do 100% financing. Obviously, a VA loan. So if you're a veteran or if you're inquiring for someone else and they're a veteran, then yes, first-time home buyer or not, the VA loan goes to 100% even on subsequent use. So that's an option. There's a loan program called USDA, and a lot of people get that confused. They think it's only for, farm or ranch land property. But a USDA loan will go to 100%. And it's got very similar underwriting guidelines to an FHA loan, but it's designed for rural communities. So we use USDA loans in Indiantown, in Okeechobee, in South Bay, in Pahokee, because while this is a residential home in a residential subdivision, it's in a rural agricultural area. So the USDA loan can be used in those instances to get to 100%. And then you hear me all the time talking about down payment assistance. I encourage you to punch in your county in Google. So if you're in Palm Beach, punch in Palm Beach County and DPA or down payment assistance. And there's a number of programs that are facilitated on a county level, some by not-for-profits, some by state-run organizations, but they'll often be available to assist with a grant or a loan that requires no repayment for the down payment portion of the transaction, which would essentially accomplish the same thing and get you that 100% financing. So hopefully that helps. I think that's an amazing question, and I congratulate you on jumping in to buy something. So let me throw it over to Dom and see if we can squeeze one more in.
Armando sent this text. I've been living and working here for a little over a year. Is this enough time here to apply for a mortgage? I've heard I need 2 years.
Hey, Armando, that is a great question. It's often misunderstood. So you hear 2 years, and most often you hear 2 years work history. That doesn't necessarily mean those 2 years have to be here. So if you were, I don't know, let's pick a profession. You were the general manager of a car dealership. I don't know why I thought of that. Maybe I'm going to buy a new car on the way home. And you transferred from another state to Florida, but you stayed in the same profession and you're earning a similar salary, then you've already met that requirement. If you've been in the same field for 2 years, it doesn't have to be in this area. So I hope that helps. But yeah, you're probably ready to go right now. A lot of loan programs only need 1 year work history, but let's talk about that during the week. Let's talk off the air because I'd like to learn more about your scenario and see if there's a better answer for you. But that's often confused. It doesn't necessarily need to be 2 weeks right here in the same location. But anyway, the music is rolling up behind us. We're going to jump into a short break and be right back in 2 minutes. Thanks.
New to South Florida and ready to set down roots with a new home? Willow Title Services makes closing a smooth, painless, and positive experience. With individual service for each buyer's needs, Willow Title Services has a combined 50-plus years of experience with industry-leading closing techniques. Call Willow Title Services today at 561-737-1630. That's 561-737-1630 at 8198 Jog Road in Boynton Beach. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show, where we go out of our way to do our very best to give you all of the information and data that you need to make better real estate and mortgage decisions for you and your family. Dom gets your questions on the air, and I do my best to answer them. And he just reminded me during the break of something. We drop a daily podcast called The Daily Dose, and you can find that at mrmortgageradio.com. And each day we pick one subject, and I just talk maybe for 5 minutes. And it was a few episodes ago, we talked about the 1% rule for investing and also the 70% rule. So if you go to mrmortgageradio.com and search the library for the 1% and 70% rule, it'll help quite a bit regarding the question we had a few questions ago for DSCR loans. And it goes into a very quick rule of thumb evaluation tool that you can use when looking at a property to either rent out or to flip. So I thought that was a good share, so I wanted to throw that out there. Hit the podcast page at Mr. Mortgage Radio, and you'll find all that. And while I'm plugging some of the other off-air assets, check out the Facebook page. Every day we post the articles and the data that we use during the show on Saturdays, but also during the week I post at least 3 or 4 times a day regarding the news of the day surrounding real estate and mortgages. And you can find that at Facebook. Just go to Facebook and search The Mr. Mortgage Show. You'll see a big picture of my mug on there, but you'll also see all the data. And you can communicate with us during the week there, too, if you're more comfortable doing it that way. So I just wanted to throw that out there. Those are some helpful resources that are available offline should you need us. But let's keep the questions rolling. I'm going to throw it over to Dom and see what we have.
Philip sent this email. What loan programs do you see offering the most aggressive rates? I'm most interested in an adjustable rate.
Hey, Philip, that's a great question. So we've got some really aggressive rates in the 5 and 7/1 ARM category right now. And it sounds to me like this isn't your first rodeo because you asked a very specific question around a very specific product. But one place we've really seen it make a huge difference lately is in the second home arena. And I don't know who's tried to purchase a second home out there in our audience, but if you have, I'm sure raise your hand if the interest rates felt super high compared to what you're used to. And they are. That it's not an uncommon reaction. And what happened back in April was there was a rule change for conventional lenders around second home financing. And what happened during the pandemic was people were buying second homes, which used to be underwritten just like a conventional loan. So you'd get the same favorable interest rate and the same low down payment. they were using those loan programs to buy Airbnb properties in all of these destination cities. And they were calling them second homes. And on paper, that it looks like a second home. It's wonderful. You know, I'm buying a house in a condo in Miami Beach. I'm buying a house in Tarpon Springs, somewhere in Vero near the beach. All of that makes sense when they're underwriting the loan. But over a short period of time, it became obvious that those were not second homes, that they were Airbnb rentals. The rental category as a whole carries more risk to the lender. So because of that, they can't filter out which ones were really second homes and which ones were really Airbnb rentals. They just slapped a pricing penalty. Now, you don't see it, the actual pricing penalty as a borrower, but you do see it in the interest rate. And that's what happened. And that's why in one failed swoop, boom, rates jumped significantly. And that penalty is between 1.5% and 4%, depending on the loan amount and the LTV percentage. And it's across the board, all credit scores. And it was just a big jump. So we're using these 5 and 7/1 adjustable rate mortgages in that space to get some pretty favorable rates. And we've even got some, they're called Elite, because they have much more stringent underwriting guidelines. But if your credit score and your income meet those, we're still getting some very, very attractive rates around those products. So, Philip, I appreciate that question. I'd love to talk to you more about it if you'd like, and you can reach us by any one of those means off the air if you need us. So appreciate that question coming in. If you want to talk more about it, just give me a call at 561-291-8569. Thanks, Philip. Hey, Dom, what else do we have?
We have a text from Dave. I recently bought a lot in Jupiter Farms. How soon can I apply for a construction loan? Do I do this or my contractor?
Hey, that's a great question, Dave. So there's no time limit. That's another one of these often misunderstood situations in lending, where you sometimes will hear a 1 year time thrown around is regarding the value of the property. So if you buy the property, let's say you just bought it, which I kind of get the sense that that's what just happened, and you paid, I don't know, I'm guessing $300,000 for, I don't know what a lot's going for out there right now. Let's say $300,000. That's what your equity position will be in the deal if you own that free and clear. But if you purchased that 2 years ago for $150,000, or even 13 months ago for $150,000, and it appraises for $300,000 now, then you would use the appraised amount. So that's the one caveat with a construction loan. If you've owned it for less, the lot that is, for less than a year, you're going to use the purchase price of the property. If you've owned it for more than a year, you're going to use the appraised value. And you can do it, or your contractor, if your contractor has financing available, can do it. But yeah, again, that's one that might require a little deeper dive. So if you need more info, give me a shout. But thanks for that question, Dave. Hey, Dom, what else do we have?
Another text, this one from Don. My dad keeps telling me I need to buy something. I know he's right. I just don't know where to start. Any advice for a first-timer?
Hey, Dawn, that was, right? So exhale. First, exhale. Get in the yoga position, light some candles, put some incense on, and some affirmations. Just relax, because your dad's right. Your dad is giving you great advice that you need to buy something if you can afford it. And you're doing the right thing. You're asking questions. So that's awesome. So first, let me commend you, and then let me say relax. I'll answer any questions that you have. I'll walk you through it should you wish. Just give us a call. But here's why you want to do it. Again, I'm going to reference that MrMortgageRadio.com page, because in that Daily Dose podcast, I did one this past week called, what did I call it? Create $100,000 without saving a dime. And we used a $425,000 purchase of a property and a 5% appreciation rate, which is historically tame, but probably where we're headed. You've heard me for a long time say somewhere between 4 and 8. So for argument's sake, I picked 5. And within 5 very short years, that example proves that you could have over $100,000 in equity. So I love the fact that your dad's giving you advice to do something. I love the fact that you're seeking info. But my first piece of advice would be just relax. This isn't a race. You have time to do it. There are people around you like your dad who are going to give you the guidance you need. I'd welcome the opportunity to talk with you, but you're going to want to look at things like your debt to income ratio and the amount of money that you have saved and then what budget you're comfortable with, and your debt to income ratio will determine the number that you qualify for. But don't go out there and spend all of it. Stick with a monthly payment that you're comfortable with. If you're approved for 500, doesn't mean you have to go out there and spend 500,000. So be comfortable with the payment and then buy the best house that you can for that payment. So hit our website if you want more information. Go to www.mr.mortgage. That's just no .com, just mr.mortgage. And there's a payment calculator tool on there that you can see exactly what your debt to income ratio is. You can play with the interest rates, move them up and down, and see what you would qualify for. And then if you want to have a conversation off the air about it, I'll take all the time that you need to just answer the questions that you have and, see if it makes sense for you. But first, I encourage you to listen to that podcast episode called Create $100,000 Without Saving a Dime, because that was recorded based on a conversation that I had just had that day with somebody who was super skeptical whether it made sense or not, because they heard appreciation was going to slow down considerably. So, and hey, remember, appreciation is still going in the right direction. You haven't heard anybody say depreciation yet, and that's when you start losing value. Appreciation is still an increase in value. So anyway, Dom's got the music in my ear. He's giving me the signal. That means we need to jump into a break. We're going to be back to answer more of your questions. And if you have questions, I encourage you to give us a call or shoot us a text. 561-291-8569. We'll be right back.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit 8198 South Jog Road in Boynton Beach or call 561-737-1630. That's 561-737-1630. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And hey, on our way into that last break, you heard me talking to Dawn and specifically encouraging her to keep digging for more info and get comfortable with this first-time purchase. And I want to share a story. I wasn't going to go into this, but it reminds me of something. And I have these people's permission, but I'm not going to use their names because it's a little bit sensitive. But they're in their 70s and they've accumulated wealth over their life. They're affluent, but they work their butt offs to do it, and they manage their money correctly, and they've done all of the right things. And throughout their lives, now these are clients, and I dare to say friends. I really enjoy both of their conversation whenever we do have a chance to revisit one another. But anyway, my point in this, over the years, they've bailed their kids out, and now that's happening with their grandkids. And the kids and the grandkids keep going back to the well because, grandma and grandpa did really well throughout their lives, but it's frustrating them for two reasons. They feel like they didn't set their kids up with the tools, the mental tools that they need to succeed on their own, and they don't want to do that same thing to the grandkids. So what they're doing instead is they're helping them buy real estate because they see the value in creating the equity that's going to be there for both their children and their grandchildren when they're not anymore. And they're fearful of what's going to happen to their estate when it's left in the hands of their kids. They don't think it's going to pass another generation down because the kids have demonstrated the inability to manage to this point. So what they're doing with their grandkids is they're getting them into properties so they can start to build equity. And the reason I'm sharing that, it was for a different reason, but Dawn asked that question about first-time home buying, and her dad's encouraging her to do it. And in 5 years, a $425,000 house will have $100,000 in equity with a 5% appreciation rate. And it made me think of these people because they're desperately doing the same thing for their grandchildren because they want to get them into a situation where they can look out for themselves and have that equity to tap in case they need to pay off bills or have unforeseen medical expenses or help their kids with college or whatever. But equity gives them access to that capital when grandma and grandpa aren't there. But anyway, I didn't mean to go down that bunny trail, but it's just another reason why we need to help, encourage, and advise the people around us to look at real estate. It's the safest, it's the easiest wealth accumulation tool. What's that old set it and forget it? There was an old infomercial regarding a cooking device. What was it? The Ronco? I don't remember. I just remember set it and forget it. That's kind of what your house is for equity wealth accumulation. You buy it, you make your payments, and you forget about it. And then when you need it, equity's there. So not to get sappy, that's kind of another reason why I love doing what I do, because I see the opportunity that real estate affords people. So I wanted to share that. But anyway, we've had some really, really good questions today. It looks like some people are seeing opportunity in the market to jump in as landlords. They're buying some investments, certainly the first-time buyers. I really liked Philip's question regarding the most aggressive interest rates that we're seeing and the programs designed to capitalize on those. And we've got them. We're serving some of our higher net worth, higher credit score clients with that elite product, and we're getting some really low rates. But anyway, I appreciate all of you. We've had some really good questions. I've really enjoyed spending the time with you so far this week. I promised you that story about how a title company can cost you thousands of dollars, but I don't know that we have time to go into it, so I think I'm going to post that on the Facebook page. Maybe that's a good tease for the Facebook page. Just go to Facebook and search The Mr. Mortgage Show, and we'll put it on there. So that was where I wanted to go with that. We're going to post that up there. And while I'm thinking of title companies and title stories, another shout out to Willow Title Services for being one of our featured sponsors. And they won't cost you thousands of dollars if you go that direction, because I know Heather and her team are rock stars. But anyway, I'm going to post that story on the Facebook page. Go there to check it out. And as always, my ethical bribe, if you will, I'm going to throw out there and ask, if you've enjoyed the show, if you found any value in it, please share it with somebody that may have real estate or mortgage questions. If you have any friends or family or coworkers who are asking questions, they're thinking of buying, they're thinking of selling, they have questions around the best way to finance properties, introduce them to the show or encourage them to call. I would love to help. I'd love to be a resource for them. They can visit the Facebook page too. Go to Facebook, search The Mr. Mortgage Show. You can hear all of the show replays and the full podcast library at mrmortgageradio.com, or check out the website at www.mr.mortgage. That's mr.mortgage.com. Have a fantastic week. We will be we'll be back next week, same station, same time. Thanks.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.